Hello and welcome. This is Abhinav, and in this video, I'm covering the gift tax provisions in US. This is basically the second in the three-part series that I'm doing. The first video I covered the estate tax provisions in US. This video is on the gift tax. Third video I'll be covering will be the strategies on how to reduce estate and gift tax. Right. So let us in this video understand the gift tax provisions which are applicable. Now, again, disclaimer, complicated subject. This is only an overview of the provisions. Please consult a qualified attorney, and I've made separate videos on those aspects, right? Okay, so let us first understand what is the applicability for reporting in Form 709. Now, there are two things here. One is the reporting that you need to do in Form 709. Second is the tax that you need to pay, right? There are two things here. So first, let us check about the reporting when you need to report to IRS in Form 709, right? First situation where there is a gift by a US citizen or a resident of property which is site used anywhere, which is basically located anywhere in the world to anyone, right? Basically anywhere in the world to anyone other than the spouse and exceeding US dollars 18,000 per donee per year. This limit is for 2024. These limits change every year, right? So basically, gift by a US citizen or a resident who is the donor of property which is site used anywhere in the world to anyone other than the spouse. To anyone is like just coming, just ignore that. To anyone other than the spouse, right? Because if you're doing it to spouse, then there is no problem. Anyone other than the spouse greater than US dollars 18,000 per donee per year. That means if it's less than 18,000, no problem, no reporting required. But greater than 18, now this limit is per donee. So you can have multiple donees, but every donee, the limit should not cross 18,000. If it crosses, then you need to report in Form 709, right? Second situation, gift by a non-US citizen. Sorry, it's complicated, but I'm trying to make it as easier and simple. Uh, but it's a complicated subject. Gift by a non-US citizen or a non-resident, maybe a person who has come back to India, right? And he has US cities property, some property located in the US, and it is gifting to a non-USC spouse, or it may be a person, yeah, so yeah, non-citizen, non-resident, US cities property to a non-USC spouse exceeding 1,85,000 per year. So you can gift a property up to 1.85 lakhs per year to your non-USC spouse. For a USC spouse, there is no limit, no problem. So non-USC spouse has to be done only by till this limit, or it's 18,000 per donee per year. Greater than 18,000 per donee per year, if you do it, then the reporting requirements arise in Form 709, right? So that is first is the reporting requirement, right? Okay. Now here, and again, as with the estate tax, gift tax also, the concept of resident. Now these estate tax, gift tax, it's a bit muddled, the definitions, right? So here there is another definition for resident, which is even different from the definition of in the estate tax, right? And it's mostly intention based and facts and circumstances based. So again, resident concept for gift tax purpose is different from residential status under the US income tax law. For gift tax purposes, person is considered a non-resident, non-citizen of the US. If it's a US citizen, then no problem. You are a US citizen. So, but as regards resident, person is considered non-resident, not citizen if at the time of the gift is made, the person is not a citizen of the US and he did not reside there. So you are neither residing in the US nor you are a citizen. Then you are considered non-resident, non-citizen. Or he was, second is a domiciled in a US territory. There are certain US territories. So if you are domiciled in a US territory and you acquired citizenship solely by reason of birth or residence in that territory, right? So then also you are considered as a non-resident, non-citizen, right? Now again, it's not a bright line test. There is no very clear definition. It depends on facts and circumstances of the case. There may be case laws on this topic. So if it's a complicated case and you are not sure of your gift tax liability, please consult a estate gift tax attorney. They will be able to advise you. Now, if the US has a gift tax with a country, then these provisions, US has certain, like with 15, 16 countries, gift tax treaties. It unfortunately doesn't have a gift tax treaty with India. Otherwise, those provisions may override the gift tax provisions of the both the countries. But unfortunately, US doesn't have a gift tax treaty with India. Now, basically, here what the requirement is that the donor, the person who is giving the gift, this responsibility is on that person, the donor, to paper file. Now, this again form is not to be electronically filed, it's a paper filing. It is a paper filing that you do in Form 709 to the IRS. It's an annual return. It's an annual return, right? Estate tax, it happens there is one return because you die only once, right? So estate tax there is only one, but gift is basically an annual return for all the gifts that you have made in a particular year. For like 2024, whatever gifts that you have made, you need to file one return anytime between January to April 15th, January 1 to April 15th of the next year in 2025, right? Now, Form 709 needs to be filed whether any gift tax is due or not. So I told you, one is the reporting requirement if you cross these threshold limits, right? Second is the gift tax, which I will come to, right? Now, please understand the estate tax limit that we discussed in the estate tax video. It's called a unified limit. Unified means the same limit applies for estate tax purposes, for gift tax purposes, right? If you breach those limits, then there's estate tax that arises at the time of death. The gift tax can arise even in lifetime if the limit gets breached, right? So the tax liability on the gift arises only if the gift amount for the year breaches the lifetime unified estate gift tax limit, which is for a US citizen or a resident, it is 13.61 million, very high limit. For a non-resident, non-citizen, it is very low limit of 60,000. So if you are a non-resident, non-citizen, that means you've come back to India and you make a gift which is breaching this limit. So up to 18,000, that's fine. So what the provision is, okay, let me come. Every gift that you make in excess of the allowed per year limits. What are the allowed per year limits? It is 18,000 per donee per year, or 1,85,000 if the donation, if the gift is made to a non-US spouse, that is per year. That is not per spouse per year, right? Because you have only one spouse, right? So either 18,000 per donee per year or 185,000 per year. If anything in excess of that limit, basically, which you have reported in Form 709. Now, please don't think that I will do it and I will not report in 709. Now, that has its own penalties. So you make the gift in excess of these limits and you report in Form 709. It basically eats into the unified limit, right? I hope you get it. So if you have like donated like 20,000 to a donee in 2024, 2,000 extra. So that 60,000 limit gets reduced by 2,000, right? And the 709 that you file to the IRS is basically a record. You are basically uh, recording your excess gifts. So that at the time of your gift tax assessment or estate tax assessment, all that is considered. So even for estate tax, if you die and there is a estate tax above 60,000, they will reduce the limit of 60,000 by 2,000 because you have filed 709 for any excess gift, right? So I hope that is clear. So first is that the unified limit should get exhausted, right? By way of taxable gifts. Only then the gift tax liability, the tax liability arises. And what is the tax liability? Is again 18 to 40%. There is a graduated rates table, as per a table, it is 18 to 40%. So you need to, especially a non-resident, non-citizen, needs to be very careful in gifting. It can trigger a IRS requirement to pay gift tax, which can actually eat up the entire whatever return that you've made on that investment, right? So very careful needs to be evaluated. Gift tax applicable not only on gift of money, but okay, so you are saying I will not gift money, I am gifting like a flat or a house. No, it applies to everything. So it basically applies on the fair market value of the house, or even applies on forgiving a debt, transferring interest in insurance policy, divorce, property settlement in divorce cases, giving up an amount for annuity, transfer of any digital assets like bitcoins or cryptocurrency, all that it applies, right? Now, spouses, if there are two spouses, generally you have this concept of married filing joint under the income tax, but not here. You have to file if both spouses have gifting for the year, both have to file individual form 709, right? Okay. Now, if both spouses are USC or resident, both can make an election in. Now, this is a facility you get. If you're a both the spouses are US citizen or resident, then you can elect. Both the spouses can elect in their respective 709 for a consent to split the gifts. So that means I can gift up to 18,000 to a person A. My wife also can give 18,000 to that person A, right? So we can basically together not donate, basically gift up to 36,000. And in our form 709, we consent that we have basically splitted the gift of 36,000 into 18,000. So that, but then if you are doing any splitting, you need to report in form 709, right? If you are making any election regarding splitting, that you need to report. So election once made applies to all the gifts made during the year. Now, if in case, so one is that you cross the threshold, then you do need to do the reporting in 709. There are two more cases. As I said, if the gift is being splitted by the spouses, irrespective of the amount of gift, then you need to report in 709. Or if the gift is of a future interest, that at a future time this particular money will be available to you or something like that, right? Then you need to file 709 irrespective of the amount of gift. Then even if it is less than 18,000, you need to file the 709. Now, gift tax liability comes on the donor, right? If the Because it's all the everything is checked for the donor. But if the donor doesn't pay, it can fall on the donee, right? The IRS may recover it from the donee. Now, gift tax is not applicable and no reporting is required in certain cases. If it's a transfer to a political organization, if there are certain exempt organizations, if you gift them, then educational exclusion. That means if you transfer the amount directly to the maybe the school or a college, right, then gift tax doesn't get triggered. Or a medical exclusion, that means if you for a person who is maybe admitted in a hospital, and if you directly transfer the money to a hospital, then in all these cases no gift tax liability or gift tax reporting triggers. Okay. Okay. Then there is this point that to escape the gift tax, there is basically, I'll discuss in the third video, next video. There is a If you make an investment in a qualified tuition plan, which is generally the 5 to 9 plans for the college education of children, US citizen children, right? If you make a qualified investment in a qualified tuition plan, which is generally 5 to 9 plans, up to 90,000 for 2024 per child. So basically, you can make that election in your gift tax return. So there is a $18,000 limit for any per donee limit, but there is an exception to that. You can transfer up to 90,000 in that account of for the 5 to 9 plan of that kid, and that 90,000 is spread in 5 years. So it is 18,000, 18,000, 18,000, 18,000, 18,000 for 2024, 2025, 26, 27, 28. Right? So it's like at in one go you are like for the next 5 years you are claiming the 90,000 exclusion. Basically, you are contributing more than 18,000. You can contribute up to 90,000 and that will be excluded, but you have to make an election for that in the 709. So you make first the investment and then you make the election in your 709, right? Okay, so these were the points for gift tax provisions. I hope this was useful. This gave you some idea. Do please share your thoughts, questions in the comment section. In the next video, I'll take up strategies on how to reduce or eliminate estate and gift tax in the US. Thank you so much for watching this video.